Hello, everybody. Welcome back to PreciseAlgorithmTrading.com. It's Saturday, April 15th, um, 2023. Sorry I didn't get to this on Friday, but this is our weekend review anyway. So, what happened yesterday in the markets on Friday the 14th? So, over here on the left hand side, it freezes this stuff over the weekend. Which is kind of handy. You can reference it all weekend long for if you're doing like just weekend analysis. Some of these trading strategies, obviously, if you follow along, can work on a longer term basis. So, I mean, just if you follow like how the daily moves, we'll just apply those same rules to the weekly, and then maybe switch the two time frames to weekly and monthly, and you could go slower. Sometimes I think this is like watching paint dry as it is. So slower doesn't really fit my personality. So, anyways, the S&P 500 here in the without the overnight action, because really there's the only overnight that happened so far is what happened in I think the last 15 to 30 minutes of Friday after 4 o'clock, whenever they stopped trading the contracts themselves. Um, yeah, so there was a little bit of obviously down action at the end of Friday. That's what I'm hovering over here on the left hand side. Very little though, so nothing to really make of that anyway. So let's just look at the indexes themselves. There's obviously, well, this is a big doji candle. A doji is where it's got a wick to the upside, a wick to the downside. This one happened to be right in the middle. Is where so it opened in the middle, went all the way up, and went all the way back down in the trading day, and came back to the middle, and pretty much opened where it closed. Within pretty much. That's why I said that like that. So that doji is a sign of indecision. So basically, it's at a point of equilibrium in the markets, and now an unbalance is there or has to happen for it to go one direction or the other. There needs to be a catalyst, and a catalyst in the market can be anything, and I think that's a lot of what the markets are. They're waiting around for news so that they can make a decision. When you're talking about it's big money players are the ones that move the market around, and when they decide to put their money uh, up or down, that's where the market's going to go. I'm talking about billions of dollars in different funds, and J.P. Morgan and the big trading firms and all those things. Those are the ones that move the market. So Goldman Sachs, those types. So when they move the market, that's why we can't obviously affect it. All we can do is follow along and take their signals and go with them, and that's what we're trying to do. It's kind of like a river running. You can't change the course of the river yourself, and so all you can do is get in and swim. You can swim against the current, or you can swim with the current. Anyways, that's what it. So that's the SPX. It is going up. Has been going up here for a bit. It's bullish. It's bullish on the True Momo indicator down here on the daily. The weekly is still bullish and actually turned green in the last couple weeks. We got target dots to the upside, and that's enough to be said about that. So I guess up here, it's April 15th. 90% of the time in the last 10 years, the market went up. The S&P went up, I should say, by an average of 2.08% over those 10 years. So that, all that means is it's a little bit of historical data, and then you can see that in May, 90% of the time in the last 10 years, and the only reason I say 10 years is because that's what our time frame is here. If I flip this to 20, it would give us the stats for 20 years. If I flip it to 1 year, it would give us the stats for 1 year. But in May, the market went up by 0.95%. And then you can see in June, in the last 10 years, sell in May and go away is a real thing. And so in June, 60% of the time, the market went up by an average of 0.08%, or pretty much went sideways. So That's the S&P, and since we're here, let's look at the transports. They are bullish. They are fighting to try to be bullish. The weekly is still bearish, and yeah, just kind of wanting to follow along with that because it's one of the laggards here lately. The Russell went down by 0.86% on Friday, but it's still green. It's still bullish on the daily time frame. It's still bearish on the weekly. It's interesting, and this is just an opinion of mine. The weekly charts obviously are the longer term trend, but in this case the daily is rising, and the daily can turn into the weekly. The weekly can certainly push on the daily, but in this case the daily's in control right now until it's not. And if the daily was to roll over and give us a sell signal out, and the weekly had a sell signal at the same time, then that would be a great indication of a time to get out. This is an interesting figure that I just noticed up here. The Russell is in June 70% of the time in the last 10 years. It went up by 1.09%. So I'm going to keep an eye on the Russell because the IWM, I don't know why that's what it is. I'm sure you could Google it and find out, but IWM is the exchange traded fund, ETF, the tradable instrument for the Russell 2000. Well, let's just pull it up. So if you just wanted to trade these signals off of these types of time frames and you know the way that this indicator works, there you go. So 70% of the time in the last 10 years, IWM actually went up by 0.84%, so not quite as good as the actual index itself, which is interesting. But this should trade and track very similarly to the index that it's built on. So, and TNA, for what it's worth, is the Ultra ETF for the same thing. So it's supposed to move faster. It does. It cuts both ways though. It moves faster up and moves faster down. So there's a little bit of argument into what's the difference, and it is what it is. That's it. So the Dow Jones Industrials have been popping higher pretty solid ever since this buy signal that happened on 327. I mean, that's quite a move, a very tradable move. The weekly is putting in a new buy signal as of last week, because that candle's finished now. So what would you expect to get a buy signal? Possibly a little bit of follow through and then some pullback, because every time you get, in my opinion, most of the times when you get a buy signal, it gets followed through with a pullback, because anybody that jumps onto a new buy signal, the markets love to take you underwater and try to make you drown. So the NASDAQ has been chopping sideways in a bullish pattern. At least I think this is a bullish pattern with a pretty nice upside potentially, which gets up to these target dots. So but chopping sideways is basically building up consolidation and potentially building up energy to pop, and it's going to pop in one direction or the other. The thing I'd be the most cautious about is the true Momo indicator is it's showing red right now, and so I mean that's part of the reason, in my opinion, why it's chopping sideways. It's got to build up energy, and then if it takes off to the upside, it's probably not going to go real far all at once, but you just got to be patient through this. So all right, is that the majority of the, yeah. So let's look at oil. I'm just going to pull up the USO contract. That's an exchange traded fund that that you can trade oil with. And oil's pretty volatile, so those are some stats that are interesting for oil. 70% of the time in the last 10 years, over the last 10 years, The oil market has gone up by 4.43%. So that's a pretty strong stat. Will history repeat itself? There's no guarantee of that. Anything could knock this off. So you got to like take that with a grain of salt and follow the signals. In my opinion, the signals are everything. And I mean, you can go back on a chart and you can see that that really plays out like that in time. I mean, there's a big one. We get a big sell signal right there. It led to one heck of a sell-off. We got a green new bar right there, which isn't a full-fledged signal, but it led to a giant move up. So there you go. That's how that goes. Bonds, I think they're on the brink of they're still alive on the daily chart. Much more of a pullback, and we could get this thing, could get a sell signal here, but we've got a sell signal for the week last week, so this might be short-lived to still be in, but I'll just keep an eye on it. That's it for my review of the overall markets. So let's flip to stockcharts.com and type in bullish, and this will give us the bullish percent indexes. And let's start from the bottom up. The S&P 500. So the S&P was up by 1% in the bullish percent indexes on Friday, while the market was actually declining. The actual price of the market was declining. So what this does, I'll just reiterate it for whoever doesn't know, it's a measurement of the amount of stocks in the S&P 500. So it's 500 stocks. Of 500 stocks, 60.6% of them are on a bullish percent buy signal, point and figure buy signal. So better than 50%. And so this gives you a gauge of kind of overbought, oversold. And the idea is when things get washed out down to where it's been a couple times here on this chart, down in the 12 level, that means that 12% of the stocks are in the S&P 500 are on a buy signal as far as the point and figure chart goes, which leaves the rest of them are on a sell signal, and that is exactly the kind of upside down action that has to happen for the market to reverse. So that's the concept behind it. The NASDAQ, the NYA, the New York average, same idea, a lot more stocks. I don't know what the count of New York average stocks are, but it's something like 7,000 or 8,000, I think. 49.7% of them are on a buy signal, a point and figure buy signal, and it went up by 0.6 on Friday, 0.6%. The transports, sometimes they don't move. Oh, we got a lot of bullishness into the transports, 9.09%. That might actually play out well for the transports being able to take off a little bit, get some buying behind them. The NASDAQ still needs to get reversed, and it's sitting in a column of O's. It needs to get up past 42, and it's at 38.26. So it needs a big catalyst to get it to even go into a column of X's. It's been hanging around for a while, just like the actual stock chart. Building up consolidation. It's going to get moved in one direction or the other. All right, then I like to look at the S&P 100 and the NASDAQ 100. Let's look at the NDX first. Minus 3.03%. So the NASDAQ's been struggling the most, but it's kind of in the upper position because it's been leading, and it's just really consolidating there. So, and the OEX is the S&P, and it's up against resistance. That's what that red line means. And it's also worth noting that we're at the 70 level, which in a lot of cases is over bought. So if we get back down under the 70 level, you can see what happens in a lot of across the back history of this. You can get a pretty major sell-off pretty quick. I could see that happen, and but not exactly right away. I could see it happen, and like I say, sell in May and go away might be a real thing this year. So that's that, and then I'll finish with our automatic trading system, which is in TradeStation. Wait a minute, one more thing since we're here. This is McClellan oscillators. I don't look at them all the time, but I am trying to keep an eye on them a little bit. We got a nice big move from way over washed out to what I'm going to call that overbought. I mean, that's where we're getting this sort of consolidation and sideways action while this thing coils into a spring. It's just a matter of, are we going to get like it did back here, where it came up against here and then it went sideways for a while it gained up, while it went back under, and then it took off to the downside. Well, we're going a little sideways right now, and it's going to be a big question of whether we're going to take off to the downside or the upside. Alright, back to the automatic trading system. So these actually trade themselves all day long, and all I have to do is turn them on, turn them off, and make sure that they don't jump off the tracks. They're kind of like a train going down a track. So just basically keep an eye on them. There's not a lot of jumping off the tracks, which is pretty handy, but again, it's a computer, so you just got to make sure it's doing what it's supposed to be doing. So this is the Dow, and it's been really not great here lately, but you know, it's fine. That's the quarterly contract. These are the individual latest trades, and really what I'm looking for is this column right here of, you know, is there anything that looks out of whack? And there's one big bad trade. It's right there. And these things have stops, so they've got like built-in protections to only go so far before it just sells you out and gets you out of a trade. There's another one right there. So you know, those things, when the markets are going, or when the all the math is in your direction and all the odds are in your favor, and all the metrics are in your favor, really, these things, you can have a positive $3,800 trade just as easily, and possibly even more, because I don't restrict the upside. The upside can go as far as it wants. The downside can only go so far. And then this is what the whole equity curve looks like for a year. It's 4/17/2022 to 4/14/2023. So a year's worth of data, a year's worth of trading. Yeah, you have some big pullbacks, but in the scheme of things, it's a pretty good looking equity curve. So this is the Russell. I trade 3 different instruments, 3 different really totally different systems, and even some of them are different time frames. So this is the Russell. It's, you know, it's actually looking like it's trying to pick back up again a little bit. It's been pretty ugly here this quarter as well. These are the individual trades. There's a lot of negative trades there. However, nothing looks too whack, if you ask me. There's a nice up trade right there. And it's the same principle. These things are limited losses and unlimited gains. So as far as potential goes. So, and then all I do is make sure the math is in our favor, and then that makes an equity curve that looks like this. And then I add all these different systems together so that I have, you know, one at any given time. I think there was a point in time on Friday that all 3 systems were trading, and 1 or 2 of them was going one direction, and what was left was going the other direction. I don't even remember if it was positive or negative at the time. I wasn't really watching the markets. I was just happened to notice what was going on as far as my active trades. So this is what it looks like, and this is from 5/19 to 4/14, so almost a year's worth of data, but not quite, and that's just based on what the system gives me, which is, it's totally fine. It's plenty of data. This is the NASDAQ, which remains my favorite system. it trades the best within my parameters, and it's been climbing back up out of a hole here lately. This is the 6-month, I'm sorry, the quarterly contract. This is the latest count of trades. And there's an example of a $5,000 trade to the good. And if you look across these, I think that $2,400 is the worst loss that's showing here. So same principle. Then we go, this is what the 1-year chart looks like, 417 to 414 of this instrument. So again, it's got the least amount of pullbacks, and that's what I like about it. So that's what I try to control, but at the same time, the math is the math, and every pullback, once it comes back up again, once it comes back up out of the pullback is when you have the potential to really stack up your gains. So that's it, guys. Hope everybody has a great weekend, and take care. Good trading, and we will talk to you Monday night.